855-835-8500, the number 855-835-8500. That number works all week long, so you can call us and discuss your situation and questions in private. You can also go online to coveryourassets21.com. And that's a great idea because we today are talking biblical proportions, snapshots from Todd Rooker's great piece, The Financial Crisis Bible. Todd, I just love your book. I went through the whole thing this week.
Well, thank you, Kelly. I appreciate that.
Yeah, it's a nice piece of work. So talk a little bit about the clients and the things that you do in your business that led to that great piece.
Well, I can give you a client that we're working with right now, almost at the tail end of this, because it's worked out well. But initially, the client came to us and had said that they knew that they needed a short sale, and really that's all they needed. They just had a couple quick questions. And as is always the case, I say it's a lot more complicated than you think. So maybe let's take a look at it. And by the way, they went to see Jason and his team because they wanted to do a short sale. Jason and his team sent him back to me and said, you need to go and talk to Todd and make sure that this is the direction you want to go, which I thought was, a wonderful way for us to interact. They told me they needed a short sale. There was no choice. And I looked at their finances, and this is the concept of looking at your situation from a position of financial accuracy, which so rarely is done. They went through all the options with me, and they told me about how they definitely needed to do a short sale, and there was no question about that. And I said, okay, well, listen, here's what I see in your situation. You've got $90,000 worth of credit card debt. You've got a first mortgage of $200,000. You've got a second mortgage of $100,000. Are you certain that you need to do a short sale? Because if you get rid of the home, you're still going to have rent that will be not too dissimilar than your first mortgage, and you're still going to have $90,000 in credit card debt. And from what I can see, you're still going to be underwater. And frankly, you'll be out of your house, but you'll not have fixed anything because you're not going to be able to make the payments even when you're in a rental property. I said, what if, in fact, instead of doing the short sale, we could attempt to modify the first position mortgage, possibly do a bankruptcy, eliminate your second mortgage, strip it out, eliminate your $90,000 in credit card debt, have a modified first mortgage? Would you still want to stay in your home? And they said, well, absolutely, if we could do that. We didn't know such a thing existed. And I said, well, it is possible. But I said, we're going to need to get some more information. We're going to go through a comprehensive budget so that we really know where you are. And, so often people will say, I'm willing to do anything to keep the house, until they recognize that anything means that their son can't be in hockey and their daughter can't be in dance, and then things change. In any event, we went through the entire process. I sent them over to Craig. They worked on a loan modification, and they got a loan modification. And the modification was great. It brought the interest rate from 6.5% down to 3.5%, which was wonderful.
Wow.
However, the problem was that when we did the budget and we considered the bankruptcy and eliminating all of these options, they felt at that point, having gone through their finances, maybe for the first time in their 20-year marriage, really looking at things objectively, they came to the conclusion that the things that they would have to give up to be able to stay in the home, even with the modified loan, even without the second mortgage, as compared with going elsewhere and rent, was more money than they wanted to spend. And they weren't willing to give up the things like hockey and dance for their kids, in which case they wound up being sent back to Jason. And believe it or not, within 1 week, they successfully got a purchase agreement, and the short sale is now geared to be closed shortly. So it was a long road to get back to where they were, but the difference was that they really had a clear understanding of their situation, and they were objectively making decisions with all the financial information at hand. That's a typical situation for me.
Well, that's what we do, is we get around a family and we look at what other options are, and we talk them through with them. And there's going to be cost each way you go. I mean, when you bring on a professional, either to short sell your house or to modify your loan, then there's going to be some costs involved. But if you move, there's going to be costs involved. If you lose your house, there's going to be costs involved. I mean, so it doesn't matter to us the direction that you choose, but virtually any tough spot, any foreclosure situation can be successfully resolved. We've helped hundreds of families in this spot, and we don't really miss very often because we understand what it takes to get done, but we don't put the wrong person down the wrong path, because that's not how we get paid. Does that make sense?
It does. But two things I want to get out of both of you right now. First of all, Todd, in the Financial Crisis Bible, which I highly recommend people go to coveryourassets21.com and download this masterpiece for free. It's a great piece. You talk about, a very difficult position that you yourself worked through a number of years ago in your life. But in this scenario you just discussed, you talked about a couple being $90,000 in credit card debt. I think a lot of people are sitting there shuddering, wondering, maybe they don't have that that much, but they don't even feel that they can get out of it. How is it possible that you can actually help people with that?
Well, it goes back to the same thing, and it doesn't matter how long you listen to me on this show, you're going to hear me talking about proper money management, and something that is often almost always overlooked. You've got to have the monthly cash flow to be able to accelerate debt, and if you can't accelerate debt, then you've essentially got three options to look at. You're going to either pay all the money and make payments long term, and credit card debt is amortized over 20 and 30 years, which frankly, unless you believe that you're going to be able to come back with a substantial amount of revenue, more than likely it's the slow boat to nowhere. Option two is where you're going to actually negotiate for a percentage of what is owed, which is not a payment plan, but in fact a lump sum. And lastly, the third option is going to be file bankruptcy and get rid of the debt, push your creditors back and get rid of the debt. So when you look at the three options that are on the table and you look at the overall finances, you come to a conclusion very quickly as to which ones actually are viable and have a reasonable chance of success, and then you build contingency A, B, and C plans around those.
So tying you back, Todd, and what you just said, and this was a client, again, that Jason ended up getting a very, very quick short sale put together when they decided that that was the right thing. Craig, let's talk about loan modifications a little bit, because I know that you do get involved with that. But here was an interesting case that Todd just laid out where it was possible to go after one, but they elected not to. Kind of speak to that and some of the other work you do in that realm.
Well, social systems that have been set up for people to modify their loans have good intentions, but they really deliver a lot of misery and stagnation. I mean, everyone
Be
just
direct.
thinks, if people just really believe if I had a lower mortgage payment that everything's going to be better, and then they go down this road, and they're actually coached by the servicer of their loan to go late on their mortgage, and because they can't speak to you unless you're late, and people that are in this spot know the modification process can be very complicated, frustrating, and sometimes it's belittling. Mm-hmm. Most families, what they really want to know, is it really possible? Is it really possible to avoid foreclosure by reducing my monthly payments? Is it really? The answer is yes. And it may not be what's best for you. And in this situation with a family that had $90,000 in credit card debt, the first thing they threw up was, I'm never, ever going to file bankruptcy, which is a lot of times what we hear. And I said, I understand that. That's a choice that you're going to be able to make. I don't have a push or pull in that. But let me ask you this. Would you pay $200,000 not to file bankruptcy? Because by the time you get anywhere on that $90,000, it's going to be $200,000.
Yeah.
And for $2,200, you can file bankruptcy and start clean tomorrow. And then your credit starts to come back, and sometimes, Todd, in approximately 2 years.
Well, and that really brings up an interesting point. The first thing is when you talk about outstanding debt, a lot of people shudder to think, as you brought up, Kelly, which, okay, fair enough, $90,000 in credit card debt is a lot of money, but here's the thing that people don't get. They immediately think irresponsibility, and they're wrong about that, because the reality is that people who have $90,000 and $100,000 of available credit got that good credit and those credit limits as high as they are because they manage their finances generally for decades without missing a single payment and always paid their credit cards in full every month. So you have to remember, people who have screwed up credit and have been irresponsible in their lives, they have $500 and $1,000 credit limits. The people who have hundreds of thousands of dollars of credit limits, those are people who, for the most part, never thought they'd find themselves in this position, and now they are. So when you make decisions about how to fix that problem, you have to remember that most of the people are not going to want to file bankruptcy. They'll avoid that like the plague, but at the end of the day, here's the bottom line. If I've got a substantial amount of debt, I've got to have the money to actually be able to do it. And I've got to know enough about my personal finances. So when I enter into this situation and I make a decision as to go one way or the other, I know that I can reasonably succeed in this endeavor. And therein lies the biggest problem. People don't have enough information, and they're not typically equipped to gather up that information to make that decision. I make a statement often. Something is not better than nothing. If I'm 100 feet underwater and I fix something with a modification and now I'm only 50 feet underwater, that's wonderful, but I'm still drowning and I've not fixed anything. So when you think about credit card debt and you say, well, if option two is to settle the debt and I've got $200,000 in credit card debt, if it cost me $60,000 to negotiate that debt as a lump sum and I really do have the money, then the question becomes very simply, are you willing to pay that much more to avoid bankruptcy if you can qualify? Because if I can file bankruptcy and I can do that for, let's say, $2,000 to $5,000, and I can legitimately take the money from my retirement account for $60,000, well, then there's a $55,000 spread between the two. Am I willing to pay $55,000 out of my retirement account to avoid having bankruptcy stamped on my credit report? And you may be able to rebuild your credit faster after a bankruptcy than doing the so-called right thing.
Mm-hmm.
So it's a decision.
It's a lot easier to bounce back from a bankruptcy than it is to bounce back from paying $40,000, $50,000 on credit cards. I mean, that's just the truth of it.
Because often you're accumulating late payments all throughout that period of time, and it's demolishing your credit. Go ahead.
The issue is there's a wave of people who have worked very hard to get a 700 Beacon score and to do the right thing. And many of these people, in fact, most of these people were not high-risk people at the time they bought the loan or the time that they got the credit cards, but disaster strikes. Typically, you would be amazed at the number of underemployed people or unemployed people or the health issues that are out there without adequate health coverage that's truly stripping out our families.
It's a big, big deal. So what we'll do is we'll move from the loan modification aspect, and I think an interesting takeaway, gentlemen, from this part of the conversation is they are possible, they are available, they're just not necessarily the right move for everybody, and there's way more pieces to the proverbial puzzle here to considering, but there are people that they will work for and that can get them. CoverYourAssets21.com is the website to go to download what we're talking about today, the Financial Crisis Bible. We're doing biblical proportions here with Jason Walgrave. We've got Craig Nestor and also Todd Rooker, unbiased advice. Cover your assets. We'll be right back.